Welcome to Office Hours at Duke University. On today's live webcast, we're joined by Professor Emma Rasiel of Duke's Department of Economics. Professor Rasiel leads several student initiatives that give real-world experience for Duke undergrads in the complex and rapidly changing world of investment banking and other financial areas. She completed her PhD in finance at the Fuqua School of Business here at Duke in 2003. She also received an MBA from the Wharton School at the University of Pennsylvania in 1990 and holds bachelor's and master's degree in mathematics from Oxford University. Before beginning her PhD program at Fuqua, Dr. Rasiel was an executive director in the London office of Goldman Sachs, a leading international investment bank. Her recent academic research includes studies of mortgage foreclosure and other housing-related topics. I'm sure we'll be getting into that before long. She obviously has some very interesting insights into some of today's most critical financial issues. Thanks to everyone who's joining us today for Office Hours. If you have a question for Professor Rasiel, you can submit it to us one of three ways. You can either post a comment on the Duke University Facebook page, you can tweet us on Twitter with the tag Duke Live, or you can send us an email to live@duke.edu. Professor Rasiel, welcome to Office Hours.
Thank you very much. It's a pleasure to be here.
So, as we just heard, your research, your teaching, it goes into a number of different areas: finance, the economy, jobs, housing. These must be really boring times in your field, huh?
Yes, very, very dull. Nothing at all happening in these areas. Actually, there's a famous Chinese proverb that goes, "May you live in interesting times," and that's actually intended as a curse. So these are very interesting times that are having, a difficult impact on many parts of the economy. Hope we're getting towards the end of it, but it's very hard to say.
Well, this week's economic news is apparently more of the same. We see stories about rising unemployment, the lingering anger over the bailouts and big bonuses at some of the financial institutions. There's, of course, the never-ending healthcare debate. There's rising foreclosure rates. Just today, we're hearing calls for Tim Geithner, Secretary of Treasury, to resign, and also for the GAO, the congressional arm, to audit the Federal Reserve, particularly as they set interest rates and so on. That's a lot of issues. Which of these very topical matters concerns you the most?
And I think these are all areas for concern. The one that I probably spend most time thinking about is the housing crisis in the context more broadly of the credit crisis. If we're to have a sustained recovery in our economy, we really do need Americans to start buying again. And when there are many Americans who are struggling simply to make their mortgage payments on their houses, that's going to distract them from spending money in ways that helps drive the economy forward. So I think what we've been seeing in the last few months is apparently the economy has been getting better. That has been coming through issues like cost cutting and making firms leaner and more efficient. And that's terrific in many ways. However, if we're to see a real sustained recovery, we do need to see consumers spending more money, and that means we need to have lower unemployment, and we also need for the housing market to recover somewhat. So there's, I think, two big issues that I'm particularly focused on.
A couple of years ago, you published a paper in which you predicted a huge drop in U.S. home prices, actually a steeper drop than most forecasts. Have you sort of revised your thinking on this as things began to pick up in the housing market during the first 3 quarters this year, or are you still kind of pessimistic in your outlook?
Yeah, so what I'll do is I'll do what most academics do when it turns out that their predictions were wrong, and I'll blame it on a few other things. We're good at doing that kind of thing. So I think we really hadn't anticipated the extent, one, of government intervention in the housing market. They gave tax relief, they put moratoriums on foreclosures. Interest rates came down further and more quickly than we expected, and of course falling interest rates do help mortgage borrowers if they have adjustable rate loans, or it enables them to refinance into lower mortgage rates. So I think that these actions by the government, both in terms of economic policy and fiscal policy, had benefits for the housing market, which is why we didn't go down as far as perhaps we'd originally predicted. Unfortunately, it's very hard to tell what's going to happen when the government stops actively getting involved in trying to recover the housing market. There are still policies that they have in place, for example, buying mortgage-backed securities. When those kind of plans stop, what are we going to see happen to house prices? The news in the last week or so on house prices has not been too positive after 2 quarters of positive news. The news seems to be turning negative again. I don't think I can even begin to predict from here. We'll keep watching the housing market. We'll keep trying to understand what the implications are of government intervention or government lack of intervention, and I think we just have to see where it goes from here.
Well, can there be a housing recovery as long as unemployment remains at these high levels?
That's a tricky one in the sense that you also have to consider issues like changes in demographics. You also need to think about, when we look at house prices at present, we're seeing very much aggregate changes across the whole of the U.S. But the U.S. is a very, very large country, and different parts of the U.S. are experiencing different levels of either economic problems or economic recovery. So to look at the aggregate numbers and say this is where we're going from here, it can be hard. It may be that parts of the country will recover more quickly, their housing markets will recover more quickly, their unemployment may go down enough, and sort of improvements in some parts of the country may then ripple through to other parts of the country.
We have all heard the expression "too big to fail." And we've heard it applied not only to some of the large investment banks, but most often we hear it applied, for example, to AIG and to some of the other really large, really deeply entrenched financial institutions. In general, do you support what the government has done? Do you support the bailout of big financial firms?
It's such a hard question to answer because bailout can mean so many different things. There can be government intervention or bailout on a relatively small level, or they can work to bring other organizations in to help with the bailout. I think that, I suppose from my perspective, when there are companies like AIG who, if they failed, that really would have an impact throughout the entire real economy and not just on Wall Street. To me, that seems a little bit more important than necessarily bailing out financial institutions because of the ripple effect that that will have in the financial markets, but not so much into the real economy. So to the extent that I'm in favor of bailout, I'd like to see it be directed where it will have the most impact on the average man on the street in America.
We want to thank everyone who's joining us today for this live webcast of Duke's Office Hours program. Our guest, Professor Emma Rasiel of the Duke Department of Economics. If you have a question for Professor Rasiel, you can post it or also post a comment on the program to the Duke University Facebook page. You can tweet us with the tag Duke Live, or you can send us an email to live@duke.edu. Professor Rasiel, let's move on to some more fallout from the economic crisis. The meltdown sent shockwaves throughout all these financial institutions and markets. A lot of the biggest names in finance, Lehman Brothers, Bear Stearns, Merrill Lynch, either collapsed or were subsumed by other institutions. What does all this upheaval mean for the average citizen in America? And most specifically, what does it mean for students who are thinking about a career in finance?
And certainly last year in particular was really a problem in terms of students finding jobs. There was a very quick drop-off in hiring, not just in the financial sector, but of course in the real sectors of the economy as well. We've very much been encouraging students just to look more broadly. Duke has a phenomenal career center that has worked incredibly hard to bring more than hundreds of companies to campus, to recruit, to provide the sort of services that make it easy for students to find jobs. We've been encouraging students in these more difficult times to be willing to look a little bit more broadly themselves, to consider other areas in which to start their careers if they're particularly interested in finance. How about looking for a job in the corporate finance function in some other part of the economy, whether not necessarily just in the financial markets? And over time, I think we've been getting that message through, and I think it's been having a strong impact, and we've seen students, having first been a little bit caught in the headlights, are now being more aggressive about looking more broadly, taking more responsibility themselves to look for jobs, and that's actually been very reassuring that the students are willing to take on some of that burden for themselves. And in fact, while I guess hiring numbers were not as strong as we would have liked by graduation '09, a lot of our '09 graduates have found jobs subsequent to graduation, and certainly we're seeing our 2010 graduates, forthcoming graduates, the job market for them in finance, in consulting, in other areas has really been picking up strongly, which is extremely reassuring.
Part of the fallout from the economic crisis has been the public's attitude toward Wall Street. Do you think that the attitude is justified? Or are the bankers the bad guys in all this? And do you think maybe we'll see in programs such as here at Duke, finance programs, economics programs, will there be a new focus on teaching business ethics?
I think that business ethics and courses on business ethics are absolutely critical during all parts of the economy. Like so many other things, we have a business cycle, we have an economic cycle. It's almost as if there's an ethics cycle, and during very negative periods in the economy, some problems come to light about the way that people have been behaving that is less than ethical, that might have been ignored during times when they're bringing in a lot of money, and we can all think of examples of this. But my feeling is that we should make ethical behavior and training in ethical behavior be central to our undergraduates really at all times, not just right now.
Finance has typically, historically been pretty much of a white male enclave. Your own experience at working at Goldman Sachs in London gives you an interesting perspective as a woman working in the field. What do you think really firms can do, and specifically can do in conjunction with academia to help achieve the goal of more women and underrepresented minorities working in finance?
Sure. I mean, this has been an issue for financial recruiters for, decades. It's true, when I was working as a trader in London, I was one of very few women traders. It's not that the entire trading floor is all men, but far more men than women are attracted to specifically the trading role. And for many years, I tried to work very hard to get other women interested in trading. I think if you look at people who play poker, you'll notice that the vast majority of people around the poker table also tend to be men. Apparently, there's some fundamental difference about taking risk that has a different impact on men versus women. But nonetheless, the investment banks have been working very hard in recent years to attract more women and more minorities into jobs in the financial markets. And I think it's starting to have an impact. They come down, they have panels with women who work on Wall Street who tell the students, here's what it's like working on Wall Street and maybe, how to manage if you have a family at the same time. I've been doing a fair amount of outreach myself in introducing minority students to the concept of the financial markets and that there are jobs in finance. And this is also an area where Wall Street has been focusing very aggressively. I don't think this is something that can be fixed very quickly. I think it's something that will need to happen generation by generation, and eventually we'll get to critical mass in terms of women in the financial markets, and I think we're probably fairly close there. And we'll get to critical mass in terms of minorities in the financial markets, and I think that's going to take a little bit longer. But I think if the efforts continue to include the minority groups in discussions, in learning about jobs in the financial markets, and introducing them to actually how rewarding a career it can be, that will over time tend to lessen the limited quantity of women and minorities on Wall Street.
What personal qualities do you think make for a successful career in finance?
I'm so sorry. Can you say that one more time?
I was just going to ask you, let me remind our audience also that we invite you to join the conversation. We're speaking today with Professor Emma Rasiel of the Duke Department of Economics. You can submit your question. We're starting to get some in, and we'll have those for you in just a moment. But you can submit your question either on the Duke University Facebook page, on Twitter with the tag Duke Live, or you can send us an email to live@duke.edu. I was just asking you, it sounds like you and others are making a real push now to broaden the diversity of those working in the financial field. What are some of the personal qualities, personal characteristics that you think make for a successful career?
For a successful career in finance, the range of people that you see going into the financial markets and succeeding in the financial markets is tremendously broad. So I don't think you can point to any very specific characteristics, but I think for undergraduates who are looking to go into finance, being willing to work hard, that's sort of a no-brainer. Being enthusiastic, trying to read around the subject a little bit. We see a lot of students who think if I want to work in finance, I have to be an economics major or I have to go to a school that has a business major. I think this is really not right. There's absolutely no need to major in economics. There's no need to do a business major. There's no need to take loads of finance classes. Wall Street needs people who have academic training in many different areas. And also Wall Street needs people who have other things on their mind than just having taken classes in finance and only really thinking about business. So, let me put in a plug here. We're incredibly proud of our liberal arts tradition at Duke. And that's something that all of us in the economics department and everywhere on the university, I think, will work hard to continue. I would like to see students graduate who can talk about a whole range of different things that interest them. And there are always ways in which, if there's a particular career field you're interested in, there are any number of ways, co-curricular and extracurricular, that you can learn about that career field. It's true that hiring in financial markets does require students to have done some pre-work so that they can speak the language a little bit, so that they know what different jobs are out there and what are the strengths and weaknesses of different firms. But it's easy to get at that information outside of the classroom. And we'd always like to see students take courses in areas that they're genuinely interested in, to get a broad education. And then if they would like to work in finance and want advice about how to do that without simply taking finance courses, there's plenty of information about that. They can go to the Career Center. A lot of students actually come and see me about those questions. I've always got reading lists for students. I'm always happy to help them think about how to read the Wall Street Journal, what areas should they focus on. I run a number of competitions that are purely extracurricular for students all across the university who are interested in finance. And that's been proving to be a great way of helping students, especially those who are not economics majors, to learn about finance and then have success in interviewing and then have success at the start of their careers.
Well, your own professional background includes, of course, work at Goldman Sachs in the financial world, and then you came to the academic world, which leads us into a question we have received via email from Jim, who asks, both academia and the financial world have CEOs or presidents who oversee large corporations for large salaries and that have had to change how they do business in reaction to outside pressures. Are there other similarities between the financial world and the academic world?
There are many similarities, but I tend to be more struck by some of the differences, I think, rather than the similarities. An academic community is run in a very different way from the private sector. I think that in the private sector, a lot of times, the bottom line is what's important, and it's appropriate that that's what's important. A public corporation's main responsibility is their fiduciary duty to their shareholders to make money. Obviously, making money in ethical and business appropriate and legal ways is critical, but that is a bottom line driver of the private sector. In academia, it's not about making money. It's about education, communication, sharing of ideas, thinking about new ways to think about different processes. So intellectually, it's a broader place to be, and the way that people think and talk and discourse and the types of meetings that you attend are very different. I think both academia and the private sector have great things to attract people and also things that don't attract people. But I also think that there are plenty of people like me who have enjoyed being in both and actually feel grateful that they've had the opportunity to experience both different types of environments.
Well, on the subject of executive compensation and CEOs and presidents of large institutions, some firms, as you know, are awarding their biggest bonuses ever, even as their own financial revenues are down, and even as national employment hits double digits. How are firms justifying this kind of behavior, and should the public be rightly upset by this?
Okay, so my view on this is we are a capitalistic nation, and that's the type of political and economic environment that we work in. And I think when companies say in these fields, if we don't pay these types of bonuses, we will lose our best people, they mean it, and I think it's true. Nobody ever promised that all sectors of the economy would be fair in terms of compensation relative to each other. It may well be considered unfair that there are people on Wall Street who are earning large amounts of money. If that's what it takes to retain them and help them to work towards coming out of this recession, then I don't per se have a problem with it. I really don't.
You have developed a number of innovative and even entertaining ways to teach students about finance here at Duke. Could you tell us a little bit about some of what you've done? And I know you have game show competitions, and give us a couple of examples of these programs and how they benefit our students.
Yeah, those have been a lot of fun, and this has been, I think, my way to address the issue of not having students feel like they have to be an economics major or take finance classes if they want to go into the financial markets. So I've been working with some Wall Street firms to find these extracurricular ways for students to learn about finance. So earlier this semester we had a game show which was actually incredibly entertaining. it was set up like your standard game show. You had somebody would be reading the questions. The students were hitting their buzzers in front of them if they were the first one to answer the question right. And we gave students guidelines ahead of time. These are the types of books that you might want to read that will help you to answer the sorts of questions that we're going to ask. We're always very big on having students read the Wall Street Journal so that they know what's going on around them, or at least what's going on in the financial markets especially. And I think the students who did well in that competition are the ones who really have demonstrated genuine interest in the financial markets, have done a lot of very broad reading. The winner was actually a sophomore who has not yet gotten to any financial classes. So that really should be evidence that you can really learn the language of Wall Street without having to go through an economics major to do so. One of the other competitions that we ran was corporate valuation. It's a case study competition. Students get into teams of 3. They're given a bunch of financial information about a firm, and they have to answer a series of questions about how to help the firm achieve some financial goals. In this particular case, it was how could the firm provide liquidity for some of their shareholders. It was a private firm that needed to raise some capital. And then I brought down some people from Wall Street to sit on a panel and judge the teams as they made presentations to show their solutions to the case study. And I think that was fantastic for the students. They learned a huge amount. They worked incredibly hard on the case studies. They had to get their nerves up to come in front of Wall Street bankers and present their solutions. And again, this was students from across the entire university. This was not just econ majors. This was students from every department. They learned to work in teams. They presented. The bankers who came down were incredibly impressed with how well they did, which was just fantastic. I mean, one of the things I love about Duke students and why I love being here is the students will work really, really hard if you give them an opportunity to prove themselves. And that makes working with Duke students just fantastic.
That prompts a question about one of the sort of hot fields in economics these days, which is behavioral economics. Are there courses for Duke undergraduates in the field of behavioral economics, or are there plans to offer such a curriculum?
So I have myself taught a course on behavioral finance a couple of times over the last few years. Unfortunately, there are some other courses that are more central to the financial economics training in our department that I teach, so I don't get the chance to teach that course very often. We're very fortunate in having a professor over at Fuqua, Dan Ariely, who's a recognized expert in this field, and he has kindly taught a course on behavioral economics for our undergraduates, even though he's based at the business school. And he also takes some of our undergraduates for independent studies so that they can get credit for doing work in behavioral economics under his direction. So that's been really fantastic. More generally, there are courses that you can take in psychology, both in the psych department and also in our Markets and Management Studies certificate program. And several of those examine psychological and behavioral biases that people exhibit perhaps during business or financial decision making. So there are many ways that students can learn about that sort of thing. I'd love to see us have a stronger curriculum in behavioral economics and behavioral finance. I'm hoping that that's something that we will be able to bring over time by bringing somebody in who focuses on that area in the department and can teach a course like that on a very regular basis. That would be very cool.
We're speaking today on Office Hours with Professor Emma Rasiel of the Duke University Economics Department. You can post a comment or send us a question for Dr. Rasiel either by the Duke University Facebook page, via Twitter with the tag Duke Live, or by email to live@duke.edu. Duke University doesn't offer at this point a degree in a major in finance. I believe that's right. But there are plans. There's planning in the works to expand the concentration for finance in the economics department. Could you tell us a little bit about some of the thinking?
Sure, absolutely. So finance is a part of economics in the same way that micro and macroeconomics are parts of economics. We do not have plans to introduce a finance major. We feel strongly that we need to keep the coursework for finance within the broader economics major, and we don't want to encourage students to focus in a really tunnel vision way purely on finance. It's important that students understand finance in the context of the broader economic backdrop. You don't want to take finance in a vacuum. However, as you said, and it's absolutely right, we are planning to introduce a concentration in finance in the economics department. So students will still go through all of the core microeconomics, macroeconomics, econometrics, and will learn the setting in which finance applies, and they'll see better if they do that preliminary coursework how finance has an impact on the broader economy as a whole rather than just in the financial markets. So students who choose to concentrate in finance will take, among their electives, among their chosen, the courses of their choice, will take a specific number relating to finance. We're also going to be introducing a finance minor, and this will be for students in the university who have chosen not to be economics majors, but would like the opportunity to take some more finance courses. So the way that we're going to set that up is we'll have a required introductory course for the minor, and that really will encapsulate all those pieces of how finance fits into the broader economic curriculum. We'll try to encapsulate that in one required course and also one required intro course in economics. And from there, with just those two required courses, students in other majors who have other academic interests will be able to go on and take 3 more finance classes from the economics department. So we're excited about being able to provide a broader group of students than just the economics majors, openings to finance classes, but we also want to make sure that they get that exposure within the broader framework of economics and how finance fits into the broader economy. This also means that students who have strong academic interests in other areas can still major in those other areas, which I really think is important. And yet now, for the first time, when we introduce the minor, they will be able to get some academic access to finance teaching.
Earlier this year, you were named one of 4 great university instructors by Newsweek magazine. Briefly, what's your philosophy of teaching, and what are you teaching currently?
My philosophy of teaching is, something that many of my students will probably tell you. I'm not a big believer in partial credit, which doesn't always go down terribly well with students when they first experience it. I think having had many years working in the financial markets where you really couldn't make sloppy mistakes and then say, oh, but look, I got the methodology right. That just doesn't work for me, because that's not what you get rewarded for in the real world, and frankly not what society is benefited by in the real world. So I tend to push students to understand that both the methodology and the final answer are really, really important. That's one of the areas in which I feel quite strongly. Another area, bluntly, is just hard work. I work pretty hard, my students see me work hard, and I try to give them the understanding that if you want to do well, a lot of it is showing up and doing the work. I also have office hours where my door is open many afternoons during the week, and try to be available to students sort of as much as possible so that they can come and get advice if they need it. If they're struggling with the coursework, I'll spend any amount of time working with them to help them understand it better, provided they show me that they're putting their effort in as well. So I guess my overarching philosophy is teaching is a two-way street. I'll work hard for them. If they work hard for me, I'll work as hard as they need to get them where they want to be. And sure, hard work is involved, being accurate is involved, but if we all put the effort in together, it ends up being an incredibly satisfying experience for all of us. I love teaching. Teaching is what I do. I came into academia because I want to teach. Teaching Duke students is so rewarding because our students have such a good attitude, and in most cases they are willing to work really, really hard. And having those students to work with, for me, is a huge reward.
Well, thank you, Professor Rasiel, for being such an inspiring instructor for our students and for all your interesting research. And today, thank you especially for your insights into finance and the economy. We've been speaking today with Professor Emma Rasiel, who is in the Duke Department of Economics, also was named one of the 4 outstanding university instructors this past year. We have come to the end of our program. We want to thank everybody who joined us today, and also especially those who sent along comments and questions. By the way, the conversation for Office Hours does continue. It is archived. You can also go to the Duke Ustream channel, not only to see shortly an archived video of this webcast, but also some of our earlier presentations as well, both for this and for some of the ongoing series at Duke, including the Duke Reads program. Next week on the Duke Ustream channel, we'll take a little bit of a holiday break with the Thanksgiving holiday, and we will be back after that. There are no new live events scheduled for this coming week, but once the holiday is passed, we will return with some interesting programs. Thank all of you very much for joining us today on Office Hours with Professor Emma Rasiel. To learn more about Duke University, visit duke.edu. We'd also, before we go, like to thank everyone for their help on today's program. Special thanks today to Scott Wells and Tom Wilson, to Meg McKee, Melissa Moser, and James Todd for all their assistance. I'm Cabell Smith. Thanks very much for joining us, and we'll see you again soon.